Hey, what if I told you there's a company that once had a stock price over $200 and now it's trading for less than the cost of a fancy coffee? I'm talking about Beyond Meat. And today, I'm going to walk you through exactly what happened here. So grab a snack, get comfortable, because this story is wild. All right, let me set the scene for you. Beyond Meat. You've probably seen their stuff at the grocery store, right? Those plant-based burgers that are supposed to taste like real meat. They went public back in 2019, and people went absolutely crazy for it. The stock shot up past $200 a share. Everyone thought this was the future of food. Fast forward to September 2025, the stock, $1.90. Yeah, you heard that right. From over $200 to under $2. That's like, imagine buying a brand new car, and a few years later, it's worth less than a used skateboard. So what happened? Well, let me break this down for you step by step. First thing you need to know, their sales are falling hard. In 2024, their revenue dropped almost 5%. Then, in the first quarter of 2025, down another 9%. Second quarter, down almost 20%. Think about it like this. Imagine you have a lemonade stand. Last year, you sold 100 cups. This year, you're only selling 80. Next quarter, 65. Trailing 12 months of sales tanking. That's basically what's happening to Beyond Meat. Fewer and fewer people are buying their stuff. Now, swap out lemonade for plant-based burgers. That's Beyond Meat. And here's the kicker. They're not just making less money. They're losing money, like a lot of it. In 2024 alone, they lost $160 million. That's not revenue, that's actual loss. In the first quarter of 2025, another $53 million gone. Second quarter, $33 million more. You see where this is going? Now, you might be thinking, okay, they're losing money, but they can just fix it, right? Isn't this a buy the dip opportunity? Maybe, but here's where it gets really messy. They're buried in debt, like over $1 billion in debt. And a lot of that debt is due in 2027. That's only like a year and a half away from when this report was written. So picture this. You owe your friend $1,000, but you only have $50 in your pocket, and your piggy bank is almost empty. That's basically Beyond Meat right now. They had about $145 million in cash at the end of 2024. Sounds like a lot, right? But remember, they're losing tens of millions every single quarter, and they owe over $1 billion. The math just doesn't work. Pretty scary situation, right? So what do? Well, they cut a bunch of stuff. They laid off workers, they shut down their operations in China, fired 95% of their staff there. They're cutting costs everywhere they can. They also came up with a new burger recipe. They call it Beyond 4. It's supposed to be healthier, less saturated fat, less sodium, more protein. They're trying to convince people that their product is actually good for you. But here's the thing. People aren't buying it. Literally. The whole plant-based meat category is struggling. Sales of these products dropped 17% in the first half of 2025. People are just not interested anymore. Maybe it's the taste, maybe it's the price, maybe people are worried about how processed these products are. Who knows? Whatever the reason, the trend is not good. And then on September 29th, 2025, Beyond Meat dropped a bombshell. They announced this massive debt exchange offer. Basically, they're asking the people they owe money to, the bondholders, to accept a deal. Instead of getting paid back the full $1 billion+ they're owed, they'd get about $200 million in new debt, plus a ton of shares in the company. Why would anyone agree to that? Well, because if Beyond Meat goes bankrupt, those bondholders might get nothing at all. So they're cutting their losses. But here's the problem for regular investors like you or me. If this deal goes through, they're going to issue over 300 million new shares. That means everyone who owns the stock right now, their slice of the pie just got way, way, way smaller. It's like if you and 10 friends own a bread shop together and suddenly 100 new people become owners. Your slice of the bread just became crumbs. When this news came out, the stock dropped 33% in one day. In one day, that's insane. So now people are asking, is this company even going to survive? There were rumors flying around in August about bankruptcy. The company denied it, said they're not filing for bankruptcy. But come on, when you have to publicly deny bankruptcy rumors, that's not a good sign. Pretty rough, right? Now the CEO, this guy Ethan Brown, he's trying to stay optimistic. He says they're going to hit break even by 2026. He says they're going to get their profit margins up to 20%. He says they're even thinking about dropping the word meat from their brand, just calling it Beyond, and focusing more on vegetables and whole foods instead of trying to imitate meat. Maybe that works. Maybe it doesn't. Here's what the analysts think. There are only 4 analysts even covering the stock anymore. Their average rating is sell. Their price target is $3, and the stock is at $1.90. So even the most optimistic view is that it might go up to $3. That's not exactly a ringing endorsement. And get this, their bonds, the ones that are supposed to pay back that $1 billion, they're trading at 17 cents on the dollar. That means if you're owed $100, people think you're only going to get 17 bucks back. The market is basically screaming that this company is in serious trouble. So here's the big question. Should you buy this stock? Look, I'm going to be straight with you. This is not a normal investment. This is a gamble, a big, risky gamble. On one hand, the brand is still well known. They've got some support from investors who believe in their mission. If they somehow turn things around, if sales start growing again, if they get their debt under control, the stock could shoot back up. It's happened before with beaten down companies. But on the other hand, everything is pointing in the wrong direction. Sales are falling. Losses are piling up. Debt is crushing them. The whole industry is struggling. And they're about to dilute shareholders big time with this debt exchange. Most investors, they probably should stay away. This is not the kind of thing you put your college savings into. If you really believe in the company, if you think plant-based meat is the future and Beyond Meat is going to figure it out, then maybe you put in a tiny amount of money you're totally okay with losing. Like pocket change. Money you'd spend on a video game or going out to dinner. But honestly, for most people, this is a pass. Just because a stock price is low doesn't mean it's a good deal. Sometimes things are cheap for a reason. Not everything is a buy the dip opportunity. So before you invest in anything, ask yourself, is this company actually making money? Can they pay their bills? Are people buying more of their stuff or less? If the answers are no, no, and less, then it doesn't matter how cheap the stock looks. It's probably going to keep falling. That's the lesson here. That's what Beyond Wheat teaches us. All right, that's it for today. Hope this helped you understand what's going on with this company. Stay smart out there, do your research, and don't fall for hype. See you next time.